Shares of Charles Schwab are up more than 8% so far in 2025 and 26% over the course of the last year. On Tuesday, the brokerage giant topped the street's revenue and profit expectations for the fourth quarter pretty handily. That stock was up sharply on Tuesday as a result. I think at one point I saw it up by 7%. The company said investor engagement surged following the election. The company, of course, has a new CEO, and that would be Rick Wurster. He took the helm at the beginning of the year, and he says the company is positioned for strength and poised for liftoff in 2025. Rick Wurster joins us right now. And Rick, it's great to see you this morning.
Becky, really nice to see you. Thanks for having me on.
Well, thanks for coming in. So let's talk about why you think you are positioned for growth. The numbers were really strong, stronger than the street was expecting. I think you beat by 10 cents or something on the top line, 101 versus the 91 cents the street was expecting. Revenue was up 20%. That was a pretty strong turnaround from what we'd seen in the quarter before. What happened?
Well, we have engaged clients. In terms of our being ready for liftoff, we're number one or number two in the two fastest growing areas of the financial services market. We have what we think is the broadest set of ways for investors to engage and the broadest methods for people to come and find us, whether it's digitally, whether it's walking into a branch. And there's a bull market for ease. And so being able to find us in multiple places and do more in one place, that's leading to lots of client growth. And that growth is what's accelerating our stock.
And where are the clients that are coming in? Who are they?
We see clients across the board. I think a little known fact about Schwab is that about 1 out of every 6 households that have more than $20 million in our country work with Schwab. And at the same time, we're crushing it with younger investors. Roughly a third of our new to Schwab households last year were from clients under the age of 30.
That shocked me. I was reading through some of the demographics numbers on that. A third were under age of 30. How many were under the age of 40?
It was more than 50%, close to 60%. So we really are doing well with young clients. And our model is that we attract them. And then what we do is we try to do everything we can to delight them and grow those relationships over time, both through digital channels and through in-person interactions.
What delights them? What makes them happy with that? What makes them stick around? And I guess I ask because if you think of younger investors, a lot of times people think it's Robinhood, right? That stock was up about 192% last year versus the 26% that you guys were up. What are you doing to find these younger people, and how do you keep them once you find them?
Well, our success with young investors is driven by the fact that we can do so much to help them. So young investors often are figuring out how to pay off their college debt, or they're figuring out how to buy their first home. And investing is an important part of that journey. And we can help them both with the investing part, but with also their broader life and how it's all going to come together from a financial standpoint. That's where we really stand apart. It's not just about a trading app. We have what we think is the best trading app in the market. We do more trades than the next 2 closest competitors in the retail brokerage space. But it's also because of everything we wrap around it.
And where do you find them? Are you finding them online? Are you say you bring them in person too? Where the majority of these new younger customers come in?
I think our younger clients tend to engage with us first digitally, and we have a great brand. We have a terrific marketing department that goes and finds young investors where they are and introduces content to them that's of interest to them. We have about 35 hours a week of content that is curated specifically for newer investors that are just figuring out how to invest. We have a capability in our Thinkorswim trading tool that allows young investors to practice investing without using real money. So it allows them to get used to what trading and what investing is like.
They're like, whoops, what did I just do?
Right. That's a good way to learn.
Right. So what do you think when you hear the hotshots like a Robinhood or an Interactive Brokers or somebody who comes in? How do you guys measure up? How do you think of them as competitors?
We feel great about our positioning. Being number one or number two in the 2 fastest growing segments of our space is a great starting point. Having the breadth of capabilities that we have, which we don't think can be matched in a period where people value that more because they value ease and they want to get things done in one place. Having that breadth of capabilities is very helpful. Having the lowest expense base in our industry relative to client assets is a big advantage. And being able to work with clients in multiple ways. We often find that as clients' lives change, big moments, whether it's paying off their college debt, whether it's buying a home, whether it's having their first baby or getting married, all of those things, people tend to want to come into one of our branches and have a discussion about it or talk to one of our experts on the phone. And being there for them in multiple ways, I think, is what sets us apart. It stems from seeing through clients' eyes and doing right by them.
So you get frustrated when you see the stock gains of somebody like a Robinhood?
No, listen, I think we're focused on delivering for our clients. So I don't look at with envy at anyone else's stock price. I look at nailing it for our clients. And what I feel great about, we had a lot of outstanding quarterly numbers that we just reported on Tuesday. The number that gave me the greatest satisfaction was the fact that our clients' satisfaction scores across our major businesses are all at all-time highs. That's what I'm excited about.
Let's talk about some of those other numbers. Net interest income was up 19% to $2.5 billion. That's the biggest portion of your revenue. What happened there? Why did it ramp up like that? Net interest income obviously is the difference between what you are paying or what the interest that you have to pay to people to get them to keep their deposits there versus what you get paid on your interest.
We've seen a real stabilization of cash deposits at Schwab, and that's what drives our net interest margin. And if you look back the past couple of years, what has happened is clients have been, at our suggestion, finding places to put their cash where they could earn more.
Okay.
And now we're down to levels of cash where it's really about their transactional needs. And so we saw in the last 4 months client deposits grow by about $52 billion, and so that has added to our net interest margin.
And the net interest margin, again, with rates, let's just talk about what the Fed has done right now. Is it harder for clients to find more attractive places to put their money? And that's just a broader example of where the Fed stands right now?
I think it's a great time to be a fixed income investor right now because you can find yield. It wasn't too long ago we were talking about zero rates, and now clients can find great rates in a lot of different places. For me, if you're a retiree right now, buying 30-year tips, you can get a 2.5% real yield. Not really any inflation risk and not a lot of risk generally to be able to go out and earn 2.5% real. It's as high as they've been in a long time. It's a good time to be a fixed income investor.